AI has, well, it just completely exploded, hasn't it?
Yeah.
Especially since late 2022.
Oh, absolutely. Yeah.
It's really reshaped the whole tech landscape, and the spotlight has been burning so bright on the companies driving this revolution.
Mm-hmm.
So today, we're taking a deep dive into one company in particular, one that's become, well, pretty much synonymous with the hardware side of AI,
Yeah.
Nvidia.
Right.
And the big question we're kind of asking is Nvidia truly the king of the AI jungle? Or are we starting to see challengers maybe emerging under the canopy?
Yeah, that's exactly what we're aiming for with this deep dive. We've pulled together a whole stack of recent market analyses, financial reports on NVIDIA, and we're going to try and unpack them for you.
Okay.
We want to get beyond just the daily headlines, dig
And
into the actual numbers, the narratives, and pull out the really important nuggets of knowledge, the insights.
so like a shortcut to getting properly informed.
Pretty much. A shortcut to being genuinely well-informed about where NVIDIA stands right now, its finances, future prospects, and crucially, what it all means for the broader AI picture.
And I mean, when we talk AI, you just cannot avoid talking about NVIDIA's GPUs, their graphics processing units.
That's impossible.
They've really become the undisputed gold standard for generative AI.
Yeah.
But after that initial sort of frenzy we saw,
Yeah, that initial rush.
right, a lot of investors have been asking, is this AI adoption thing just like a flash in the pan?
Yeah.
Or does it have serious long-term legs? Does it have room to run? People want proof, basically.
Compelling evidence, exactly. And that's why all eyes are just fixed on their upcoming fiscal 2026 second quarter results.
Ah, the Q2 numbers.
Yeah, they're due out after market close on Wednesday, August 27th. Everyone is going to be scrutinizing those numbers for concrete clues that this incredibly strong demand for AI chips is actually continuing. It's fascinating how much really rides on those reports.
Okay, so let's maybe unpack this by looking back first. Their most recent performance, the fiscal 2026 first quarter. And honestly, it was remarkable.
It really was.
I mean, despite some really tough year-over-year comparisons, meaning, they were up against already strong numbers from the previous year.
Yeah, the base was high.
Exactly. They reported record revenue, $44.1 billion for the quarter ending April 27th. That's a huge jump, 69% year-over-year growth, and up 12% just from the previous quarter.
Sequentially, yeah.
And their adjusted earnings per share, the EPS, came in at 81 cents, up 33%.
But hang on, there's a little asterisk there, isn't there? Something important.
Ah, yes, that's a crucial distinction.
Yeah.
NVIDIA actually took a $4.5 billion write-down.
Okay, what was that for?
It was on H20 chips that were destined for China. So think of a write-down like this. They basically had to mark down the value of those chips on their books because they couldn't sell them at the time.
Right, because of that temporary ban, the moratorium on certain AI chip sales there. Exactly. Now, the good news is that moratorium has since been lifted, but, and this is the key part, if we exclude that one-off charge from the results,
Okay.
that adjusted EPS figure would actually have been 96 cents.
Wow, quite a difference.
Which would represent a whopping 57% increase year over year. So make no mistake, the real driver behind these incredibly strong results, even with that write-down, was the continuing, just insatiable adoption of AI.
And that shows up in the data center numbers, right?
Absolutely.
Oh.
Their data center segment climbed 73% to $39 billion. Just think about that. That's a staggering 89% of NVIDIA's total revenue.
89%.
It just underscores how absolutely central AI is to their business right now.
That kind of concentration in data centers, nearly 90% of their revenue, that's just astounding.
Yeah.
But what does that tell us about the nature of the AI revolution itself? Is it really as widespread as these investments suggest, or are we maybe still just seeing the tip of the iceberg?
Well, that really raises an important point, doesn't it? For a company this massive to report 69% year-over-year growth, and for one single segment to dominate so completely, it signals that the market isn't just adopting AI, it's like guzzling it.
Guzzling, yeah, that's a good word for it.
This isn't just about NVIDIA selling more chips. It's about a fundamental reprioritization of capital across the tech world, specifically towards AI infrastructure.
So it really makes NVIDIA that foundational pick and shovel play in this new gold rush.
Exactly. And, management seems to expect this growth spurt to continue, which is also very telling. Their guidance for the next quarter, the fiscal 2026 Q2.
But one everyone's waiting for.
Right. They're guiding for revenue of $45 billion. That would still be an incredible 50% year-over-year growth.
Still 50% on top of already huge numbers. And what about Wall Street analysts? Are they buying it?
They're even more bullish, actually. The consensus call is for $45.68 billion in revenue and an adjusted EPS of $1.
Okay, so higher than Nvidia's own guidance.
A little bit, yeah. So what's interesting here is that despite some concerns, you sometimes hear, whispers about AI adoption maybe hitting a wall.
Right. Is the demand sustainable?
The evidence from these reports and the spending plans we're seeing just doesn't support that idea right now.
Okay, so let's connect that to the bigger picture then. You mentioned spending plans.
Exactly. Think about the big three in cloud computing. Amazon Web Services, Microsoft Azure, and Alphabet's Google Cloud.
The giants.
All of them have recently revealed plans to increase their infrastructure spending this year, even beyond what they'd already announced.
And we're not talking small change here.
No way! We're talking massive numbers. Amazon adding $18 billion to their plans, Microsoft adding $20 billion, Alphabet $10 billion, and Meta Platforms, another huge Nvidia customer, adding $6.5 billion.
Wow. And crucially, most of that increased spending, where's it going?
It's directly earmarked for building out additional data center capacity.
Yeah.
Why? To support the growing demand for AI.
Which primarily runs on
Nvidia GPUs. It's absolutely no coincidence that these four companies, Amazon, Microsoft, Google, Meta, are Nvidia's biggest customers.
Can you remind us of those total spending numbers? They're staggering.
Yeah, so Amazon's going from a planned $100 billion in capital expenditure to $118 billion.
Away.
Microsoft from $80 billion up to $100 billion.
100 billion.
Alphabet from $75 billion to $85 billion. And Meta from $62.5 billion up to $69 billion.
These huge CapEx increases from the cloud giants.
Yeah.
I mean, it's not just about buying more chips, is it? It feels like it signals something bigger.
It really does. It reveals a fundamental shift in how businesses are approaching technology now. AI isn't just like an add-on feature anymore.
Right.
It's becoming the core operating system for future innovation, basically. And these companies are just pouring resources into building that foundation.
And on top of that, there's the China factor.
Right. Plus, you've got the significant expansion of opportunity now that those H20 chip sales to China, which were blocked for a while, can resume.
So it really seems clear that NVIDIA's AI opportunity is still expanding,
Yeah.
like in multiple directions.
Absolutely.
Okay, now let's shift gears a bit to the investment perspective. Because, we have to acknowledge NVIDIA stock is expected to stay volatile.
Oh, for sure.
When I saw the stat that it's gained, 882% over the past 3 years,
Yeah.
my jaw just dropped.
It's astronomical.
But then you see it's also fallen as much as 37% of points during that same time. And it really hits you. This is not for the faint of heart, is it?
Definitely not. It's a true roller coaster.
So if you're listening and asking, okay, should I buy the stock before August 27th? The honest truth is, nobody can definitively predict short-term stock moves after a quarterly report.
Yeah, my crystal ball has definitely been on the blink for some time now, too. Always seems to be.
Yeah.
But look, I can share some, let's say, very vague predictions from the source analysts we looked at.
Okay, what are they thinking?
They expect Nvidia to announce yet another quarterly revenue record, and they think it's likely they'll beat those consensus estimates we mentioned, the $45.68 billion in sales and $1 adjusted EPS.
Right.
Beyond that, it's really anyone's guess how the stock itself will react on the day or the day after.
Win or beat, it can still go down sometimes.
Exactly. But what's really crucial for investors, especially long-term ones, to understand is that the core investment thesis for Nvidia, it seems to remain robustly intact.
And what is that core thesis boiled down?
Well, first, its cutting-edge GPUs are still the gold standard driving this whole AI revolution. Second, Nvidia remains the undisputed market leader.
Okay, so on that point about being the undisputed leader, what about competition? We hear noise about rivals, AMD, maybe Intel, even the cloud providers building their own chips sometimes. What does that really mean in the context of NVIDIA's current dominance? Has anyone truly, stolen their thunder yet?
That's a vital question. And yeah, the specter of competition is always there. Other companies are certainly trying hard to innovate in this space.
Sure.
But our sources, the analyses we reviewed, they confirm that so far, no innovation has genuinely challenged NVIDIA's position in a fundamental way, or offered a product that's clearly superior enough to actually threaten their leadership right now.
Why is that so hard?
Well, they've built this incredibly comprehensive ecosystem. It's not just the hardware, the GPUs, it's the software, CDA, the networking. It all works together, and it's incredibly difficult and expensive to replicate effectively.
Right, that ecosystem moat.
Exactly. And this is why, even though we're still arguably in the early innings of AI,
Everyone agrees on that part, at least.
yeah, most experts agree on the immense potential here. Now, there's no real consensus on the ultimate size of this market. Conservative estimates start around, say, $1 trillion.
Which is already huge.
Already massive. But then you have firms like PwC estimating the total economic impact could be a staggering $15.7 trillion between now and 2030.
15.7 trillion. That's just hard to even grasp.
It's a huge range, obviously, but it just signals how absolutely monumental this technological shift is expected to be.
Okay, that brings us back to valuation then. Because when we talk about numbers like that, how do we justify Nvidia's current valuation? It's trading at roughly 30 times next year's expected earnings. For people not deep in financial reports, that can sound pretty high, pretty expensive.
It can, absolutely. 30 times forward earnings is definitely a premium multiple. But that premium is essentially backed by the company's track record, right? Decades of innovation, its clear industry-leading position right now, and its history of delivering incredible growth.
So investors are basically paying up for future potential.
Precisely. Think of it like this. Investors are willing to pay that premium because they see extraordinary continued growth potential ahead. It's not just about what the company earns today, but the massive earnings they're expected to generate in the future, assuming they maintain that innovation edge and market leadership.
It strongly suggests a long runway ahead, as they say.
That's the argument, yes. And when you look at some of their other metrics, like their gross margin,
Yeah, what was that again?
it's around 70.11%. That is a massive indicator of NVIDIA's pricing power and just how indispensable their technology is perceived to be right now.
70% gross margin. So for every dollar of chips they sell,
Yeah.
they're keeping 70 cents after the direct costs of making them.
Exactly. That's a phenomenal profit engine. And, just for context, their market cap is currently hovering around $4.4 trillion.
Truly immense scale for one company.
It is. And while, yes, they do pay a dividend, the yield is tiny, like 0.02%. It's obviously not a stock you buy for income.
No, it's a growth play, pure and simple.
Absolutely. So for investors, for listeners who truly believe this AI revolution is going to play out over the next decade, maybe longer, and who believe NVIDIA will maintain its leadership position through that, well, then the short-term stock fluctuations maybe don't matter quite as much.
Becomes more about the long game.
Exactly. It's about, buckling up for what will likely continue to be a bumpy but potentially very profitable right ahead.
Okay, so let's try and sum this up. What does this all mean? To recap, NVIDIA's pivotal role, its position as the key enabler of the AI revolution, that remains undeniable right now.
Yeah, totally. It's driven by those gold standard GPUs and, crucially, sustained even expanding demand from the biggest cloud providers on the planet.
Right.
And if we just, connect this to the really big picture for a second, considering that enormous projected economic impact of AI, we talked about trillions, potentially tens of trillions of dollars, it does raise an important question, doesn't it?
Which is?
Well, what new forms of dominance or market leadership might emerge beyond just the hardware providers like NVIDIA? As AI moves from being about infrastructure into basically every industry, every aspect of life.
That's a great point. What happens next beyond the picks and shovels?
Yeah. And maybe what does this deep dive into NVIDIA, just one company, tell us about how quickly these profound technological shifts can completely redefine entire economic landscapes? Something to think about.